Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Dow Jones is down today 0.7%. NASDAQ is break even. S&P 500 down slightly. Russell 2000 down 1%. Oil price up 3%, a $2 increase per barrel to $68 per barrel. And the Treasury yield curve is up across the board today pretty materially. 10-year Treasury yield is at 4.42. On the heat map, you can see that Visa, MasterCard, and other financial credit services are down quite a bit. Microsoft is up, Nvidia is up, and other chip makers are mixed. Amazon is up, Google is up 1%, Tesla is flat. Everything else is generally down today. Let's read our daily article. S&P Dow slide as Trump turns up tariff heat on Canada. The S&P 500 and the Dow fell on Friday and were headed for a downbeat week as President Trump ramped up his tariff offensive against Canada, amplifying the uncertainty swirling around the U.S. trade policy. Trump on Thursday announced a 35% tariff on Canadian imports set to kick in next month, up from the 25% imposed in March, and warned that the levy could climb higher if Canada retaliates. The president also floated the possibility of a sweeping 15 or 20% tariff on all other countries, up from the current 10% baseline. Caution also prevailed as the European Union braced for a possible formal letter from Trump with details on fresh tariffs. The S&P 500 and the tech-heavy NASDAQ were on course to close the week in the red, while the Dow looked set to end its 3-week winning streak, the longest stretch since January, and braced for its steepest weekly drop in over a month. Markets this week remained mostly subdued. The only upside was Nvidia shattering all records to become the first company to top a $4 trillion valuation. Its shares hit a fresh record high on the day, helping the tech-heavy NASDAQ stay out of the red. The index held steady at 20,633 points. This week, Trump expanded his tariff campaign, taking aim at a wider range of countries, including allies such as Japan and South Korea, and slapping a 50% tariff on copper. Yet the market response to this latest salvo was a far cry from the turmoil seen after April's Liberation Day tariff announcements, which triggered the sharpest weekly losses for major indices in nearly 6 years. Analysts are noting a growing sense of resilience among investors who seem to be getting used to Trump's tariff threats. 1 second. All right, I'm going to start this part again. Sorry about that. We didn't go live on. Let's do this again. Hello, everyone. Welcome. My name is Yamal. I provide daily updates on Tesla markets and technology. Yikes. Markets are down. Dow Jones is down 0.7%. NASDAQ is flat. S&P 500 down slightly. Russell 2000 down 1%. Oil prices are up $2 per barrel, up 3% to $68 per barrel. The yield curve is up across the curve and steepening. This is quite a big increase, actually, for one day. 10-year Treasury yield is at 4.42. S&P 500 heat map shows a handful of the maximum companies are up. Tesla is flat. Apple is down. Meta is down 1%. Financial sector is down quite a bit today. I'm not sure what's going on there, what the reason is here. Healthcare is down. Oil stocks are up due to energy prices being up. S&P Dow slide as Trump turns up tariff heat on Canada. The S&P 500 and the Dow fell on Friday and were headed for a downbeat week as President Trump ramped up his tariff offensive against Canada, amplifying the uncertain swirling around the U.S. trade policy. Trump on Thursday announced a 35% tariff on Canadian imports set to kick in next month, up from the 25% imposed in March, and warned that the levy could climb higher if Canada retaliates. The president also floated the possibility of a sweeping 15 or 20% tariff on other countries, up from the current 10% baseline. Caution also prevailed as the European Union braced for a possible formal letter from Trump with details of fresh tariffs. The S&P 500 and the tech-heavy Nasdaq were on course to close the week in the red, while the Dow looked set to end its 3-week winning streak. Markets this week remained mostly subdued. The only upside was Nvidia shattering all records to become the first company to top $4 trillion valuation. This week, Trump expanded his tariff campaign, taking aim at a wider range of countries, including allies such as Japan and South Korea, and slapping a 50% tariff on copper. Yet the market response to this latest salvo was a far cry from the turmoil seen after April's Liberation Day tariff announcements, which triggered the sharpest weekly losses for major indices in nearly 6 years. Analysts are noting a growing sense of resilience among investors who seem to be getting used to Trump's tariff threats. Investors are, however, on guard for the upcoming earnings season, which they expect to provide a fresh insight into how trade tensions are reverberating across corporate America. We believe expectations are a bit low for S&P 500 earnings. Much of the second quarter was marked with tariff and trade issues, and that may have caused some dislocations in earnings, said Michael Landsberg, CIO at Landsberg Bennett Private Wealth Management. Denim maker Levi Strauss and Co. jumped 11% after the company raised its annual revenue and profit forecasts and beat quarterly estimates. Meta Platforms fell 1%. A report said the company was unlikely to make more changes to its pay or consent model, potentially inviting fresh EU antitrust charges and hefty daily fines. Declining issues outnumber advances by almost 3-to-1 ratio in NYSE and by a 2.5-to-1 ratio on NASDAQ. That's not a good sign. Let's dig into Trump tariffs a little bit more. What goods may and may not be affected by Trump's 35% tariff on Canada? President Trump surprised markets late Thursday with a letter announcing a 35% tariff on Canadian goods, but some notable industries, such as energy, could get some relief from the new threats. Guidance offered Friday morning by the White House is that this 35% rate, if Trump follows through, that's a big if, will increase the rate on goods currently facing a 25% duty, but that key carve-outs are likely to be maintained. A White House official told Yahoo Finance that the expectation is that the situation will not change for the US-Mexico-Canada agreement, compliant goods, which are often exempt from tariffs entirely, as well as for energy products like oil and fertilizer known as potash. These are key flashpoints that currently see 10% duties. Yet the officials stressed that no final deal has been drafted and Trump hasn't made a final decision. Trump's letter also made clear that sector-specific tariffs on steel, aluminum, autos, and soon-to-be-implemented copper duties will be excluded from the 35% rate, as those goods already face duties from 25 to 50%. It was a capper on a week filled with promises of major new tariffs coming August 1 on countries around the world, from Brazil to South Korea, as well as unveiling of those 50% duties on copper. Yet the expected continuation of some carve-outs for Canada, as well as an August 1 start date for all these new duties, may provide a measure of relief for markets that retreated Friday morning on the tariff threats as it began to digest Trump's latest surprise. The potential carve-out for USMCA-compliant goods is significant, as experts often estimate that those excluded goods under the 2020 agreement make up around 40% of imports from Canada. Oil and the fertilizer potash have also long been keen areas of interest. Americans not only consume Canadian oil, but American refiners often mix crude oil from Canada with American crude oil, leading to fears that a cutoff would create a ripple effect on US production. Likewise, with fertilizer, many agricultural states are highly dependent on the potassium-based potash that comes in from Canada in order to grow their crops. As Iowa Senator Chuck Grassley put in the spring in a social media post, I plead with President Trump to exempt potash from the tariff because family farmers get most of our potash from Canada. Any relief may be tempered by the sense that these carve-outs are likely to continue, but remain on the table if Trump's often renegotiated deals. Indeed, Thursday's letter to Canada from the president ended with a line that has ended all letters this week. These tariffs may be modified upward or downward depending on our relationship with your country. I mean, the reason why the stock market isn't reacting to this is because most of the goods that are being imported from Canada into the US are exempted from this letter. So I don't know if it matters that much. Geely, let's switch to the automotive industry. Geely Guillaume Xinguan crowned champion of China's first half 2025 sales, BYD Seagull second, Tesla Model Y third. Chinese auto media Yish has released its top 20 vehicle sales chart for the first half of 2025, revealing a shift in the competitive landscape, which, by the way, we've been talking about for months, particularly within the burgeoning new energy vehicle segment. The data indicates a strong performance by Chinese brands, with Geely's Guillaume Xinguan model emerging as leader. The overall trend in the top 10 positions favors new energy vehicles, encompassing both pure electric and plug-in hybrid models. Chinese domestic brands hold a majority, with 8 joint venture or foreign branded vehicles making it to the top 20. With the price starting at $9,900 USD, the Geely Guillaume Xinguan secured the top spot, selling almost 205,000 units in the first half of the year. This performance allows it to outpace rivals such as the BYD Seagull and the Tesla Model Y. The Xingi stands as the sole model on the list exceeding 200,000 units in sales. BYD Seagull maintains robust average monthly sales of approximately 30,000 units, securing a second place with 175,000 units sold. Tesla Model Y landed in third place with 171,000 units sold in the first half of 2025. Despite being third overall, it holds the title of the best-selling premium pure electric vehicle in China, with the 200,000 yuan and above price segment. I think that's going to change with the U7 coming online in the coming weeks here. The Hongguang Mini EV, a former electric vehicle sales champion, remains a formidable player in the micro-electric vehicle segment, ranking fourth. And you can see from 6 to 10 is the Xiaomi SU7. This is the Model 3 competitor. And you can see Xiaomi SU7 is number 6. And where's Model 3? As I scroll down, there's no Model 3. Even Toyota Camry is selling more than the Model 3 here, which is amazing. So I think Xiaomi SU7 really lowered demand for the Model 3. And then and I think the same will happen with the Model Y as U7 comes online in the coming months. So I think Tesla China is headed down, has peaked and headed down. I don't really see how that changes. Also, the other thing to note here is sometimes you'll see Tesla bulls boasting that, for example, some Tesla model is at the top of these lists. But the fact is, Tesla only has one model in the SUV segment and one model in the sedan segment, whereas BYD sales in each segment is kind of divided across multiple vehicles. So BYD Seagull, King Plus, Song Plus, etc. BYD has, as you can see, 6 vehicles on this list. Okay, Volkswagen even has 3 vehicles. So that's something to keep in mind when, like, if you want a Tesla SUV, the only thing you can go to Model Y. So I don't think it's a fair comparison. All right. Now, last news on Tesla. Tesla has not yet applied for robotaxi permits in California, state regulators say. Tesla has yet to apply for regulatory permits. It needs to operate driverless vehicle taxis in California. 2 state regulators said on Thursday, a day after CEO Elon Musk said the company would expand its robotaxis to the San Francisco Bay Area within 2 months. To date, Tesla has not applied for either driverless testing or deployment permit, a spokesperson for the California DMV said in an email to Reuters on Thursday. The California Public Utilities Commission, which in March issued the first in a series of permits Tesla requires, said on Thursday the company had not yet applied for any new permits. All it has so far is a transportation charter party carrier permit, typically associated with chauffeur-operated services, which allow Tesla to own and control a fleet of vehicles and transport employees on pre-arranged trips. The successful expansion of robotaxis will be crucial to Tesla's future as sales of its aging lineup of EVs have slumped with rising competition and a backlash against Musk's embrace of far-right political views. Much of the company's trillion-dollar valuation hangs on Musk's bet on robotaxis and humanoid robots that are powered by AI. Tesla reached out to Arizona late last month to start a certification process for an autonomous vehicle ride-sharing service, and a decision is expected by the end of this month. The state's transportation department said on Thursday, quote, they have expressed interest in operating within the Phoenix metro area, end quote, Arizona's Department of Transportation said in an email to Reuters. Tesla has applied to test and operate both with and without a driver, it said. Tesla shares are down 23% this year. Tesla last month rolled out a small test of its vehicle. We know all this stuff. Even as social media videos showed multiple traffic problems and driving issues over the first few days, CEO said in a response to a post on the social media platform X on Wednesday that Tesla would expand the service to a larger area in the city this week. He didn't say how much larger, but I guess we'll see. When another user on X asked about expansion, waiting on regulatory approvals, but probably within a month or two for the Bay Area. And now the California DMV says we don't have any permits applied. So interesting turning of events, but it's not that surprising. Thank you very much, Zachary. Zachary just tipped $5. He says, thank you for your hard work. I appreciate it. And on that note, thank you very much, everybody. And enjoy your weekends. I will see you on Monday. If there are any breaking news over the weekend, we'll come online. Otherwise, I'll see you on Monday. Take care.